Hi, everyone. So it's easy to talk about the value proposition of Bitcoin and crypto and all the benefits, and I'll leave that to everyone else. Everyone who knows me knows I've been an ultra bull on Bitcoin for like 8 years, but now it's time to talk about the elephant in the room, and that's the two biggest threats to Bitcoin and crypto today. That's treasury companies and the quantum computing industry. So treasury companies, first thing to note, if enough of the treasury companies are trading a discount to their NAV, it means they can't issue equity to raise capital because it's dilutive, it's bad for the shareholders. So that can cause incentive structures for forced selling on a down cycle, to leverage up and down. Then we've got the quantum threat, probably the biggest risk factor to Bitcoin and crypto today. Within 2 to 8 years, the quantum machine will break the existing elliptic curve cryptography of Bitcoin, and I'll explain why. So first, the treasury company bubble. Very briefly, you may have heard of the investment trusts of the 1920s. The way they worked is in the box on the left here. Basically, they raised money from investors, bought equities, listed on exchange, traded a premium, and then used that to re-leverage up. On the right, we've got the treasury companies. There's not a lot of difference. The main factor is we're buying Bitcoin or altcoins. So to me, it looks a very similar picture. So if we look at MicroStrategy, is it just a rebranded investment trust? So what were they saying in the 1920s? They were saying we were running out of common stocks. They were saying they were trading a bit of a scarcity value. They were also listing at 2 to 3 times the premium on the value of their underlying. Sounds quite similar to me to what we see today. We know what happened in the 1930s. Everything crashed 90%. 1940s, the Investment Trust Act came out for companies and basically lawed this out. So it's history repeating. On the left, we got the count of the investment trusts in the 1920s. On the right, we got the count of the Bitcoin treasury companies. It looks pretty similar, obviously moving a lot faster today, given it's a modern world. We can see that the number actually ended up peaking at about 600 companies in the 1929. We're at about 200 almost for Bitcoin and altcoins today. So how did we get here? How is this possible? So there's many reasons. If you want the full details, check out the article. But I'll focus on the main point, which is obviously the success of MicroStrategy. And their wins have basically driven more capital and exposure to this. They basically levered up by arbitraging the low cost of debt in traditional markets and putting it into the highest performing asset, and voila, they outperformed everything. I want to point to this quote by Warren Buffett in 2000, just after 2008, about the credit default swaps and what brought down the whole world economy at the time. Basically, he said, first come the innovators, then the imitators, and then the idiots. People don't get smarter about things like greed. So a few parallels. How is this allowed? Well, basically, the only reason they can get away with it is a loophole that the Investment Company Act only applies to securities, and Bitcoin crypto is currently not classified as security. So what are the risks? There's 2 main risks: a leverage unwind and collapsing MNAVs. First one is leverage. This is a no-brainer. If they take too much leverage and unwind to the downside, we have a big problem. The good news is today, the leverage multiples are still relatively healthy. So we're tracking a few of these live debt to Bitcoin ratios, debt to enterprise values, etc. We're in the sort of 10 to 25% range right now. So not concerning, which is good for now, but definitely a metric to watch the spikes as the bubble grows. The other factor is trading at a discount. If too much of this market trades at a discount, which is an MNAV less than 1, of the value of the company to the Bitcoin, you have problems, right? As I said, it's dilutive to issue shares, so what do? You can issue debt and drive up leverage and the risk factor we just spoke about to buy more Bitcoin. How else can you buy more Bitcoin? Well, you could just sell some Bitcoin to close the MNAV gap and try and approach a fair value. Or you could just abort your strategy. All of these options are basically bad for Bitcoin, drive down price and cause leverage to the downside. You can see the chart at the top right here is the average MNAV, or the premium discount for these companies over time, and it's a straight line down. So that's a concerning trend. And on the bottom here, we have the Grayscale Trust, which was, people around 5 years ago know, the #1 trade at the time. It's similar dynamic. You could invest in this trust. It was like an ETF, but it was trading a premium. Everyone thought it's free money. Put your Bitcoin in, you make more money. Obviously, the premium collapsed and it brought down the whole market with it. However, things are rosy for now. Things are good because the demand is outstripping the supply. So the blue line here is how much Bitcoin institutions are buying per day on average. The red line is the mined Bitcoin supply. And currently it's at about a 400% multiple. So as long as that happens, you can see the green here, your price goes up a lot. So things are healthy for now, but this is something to watch because it will swing very aggressively the other way, I believe, at some point. There are many other risks to monitor and data points. If you want to learn more, you can scan that. But basically, tracking things like the buy-sell ratio. Some of these companies are already selling some of their Bitcoin over time. You can track the MNAB percentiles, etc. Okay, the next one, the quantum threat. This is the biggest threat to Bitcoin and crypto today, in my opinion. Within 2 to 8 years, a quantum machine will break Bitcoin's current encryption, and Satoshi's coins will be market dumped. Isn't quantum years away? If you ask ChatGPT or Grok, it'll tell you 10, 20, 30 years away. It's rubbish. I'll tell you why. Already, quantum machines are deployed on all major cloud infrastructure, AWS, Google, and Azure. It's used in many industries today. AstraZeneca uses it, used in drug discovery, defense, in optimizing bond yields, etc. McKinsey, probably the most renowned consulting firm in the world and think tank, says it's going to generate trillions, with an S, of value within a decade. What about Jensen, our friend from NVIDIA? He's gone an interesting journey this year. In January, he said it's 15 to 30 years away. Within 24 hours, the whole quantum industry collapsed 60% overnight. I think he then got the tap on the shoulder and got educated because a couple months later, he said, I was wrong about the quantum timeline. Then in June, he said, we're at an inflection point for quantum. What's he been doing this month? He's been spending billions buying quantum companies. So as always, follow the money. We've seen this before, Jamie Dimon, all the TradFi banks, etc., and are now printing with Bitcoin, right? Q-Day is the day in which a quantum machine will break classic encryption, so RSA, and that breaches security, financial systems, sensitive data, all that sort of stuff, and of course, Bitcoin. So how will that unfold for Bitcoin? Well, multiple sources of reputability converge on a sort of 2 to 9 year horizon to break Bitcoin. Jameson Lott, Bitcoin developer OG, 10 years in security in the space, 50% risk in 4 to 9 years. Yeah, look, math, PhD, doctor, specializing in quantum, 2 to 6 years for Bitcoin. McKinsey, again, biggest consulting firm in the world, they say Q-Day, which is breaking RSA, is in 2 to 10 years. And remember, RSA is stronger than elliptic curve cryptography of Bitcoin. So Bitcoin breaks years earlier than that. So we've got between 2 to 10 or less for that. Perhaps the most robust paper on this is the Bitcoin quantum paper, 2017. They found you only need 2,300 qubits, logical qubits, to break Bitcoin's ECC. Written by who? 3 doctors, principal Microsoft, VP IonQ, biggest quantum company in America, and Meta. So these are 4 official statements of some of the biggest quantum companies in the world today. The red box is highlighting all the regions they're expecting to converge on multi-thousand qubit capability, which is more than sufficient to break Bitcoin. Again, you're looking at the 2028, 2029, 2030 region as a high probability. So it's a bit of a bell curve, high probability in 4 to 5 years, some probability in 2 years, and obviously it grows. We're also in a quantum arms race. If Q-Day is going to happen and break secrets and information, what does that mean? Well, it means the governments have to have quantum supremacy to protect information and have competitive advantage. So they're investing billions. We've had 55 billion committed into the quantum industry in recent times. China is spending double the US. So a tsunami of money is starting to flow into this industry. So if they're spending double, what happens if they're solving things in privacy and we only have 2 to 3 years? So Q-Day is coming. This chart shows the trend of qubits, which is the processing power of quantum over time. And it's basically a straight line in a log chart. It's progressing faster than Moore's law, which, as you know, has worked for 100 years and projecting the processing power of computers. So imagine 2021 and thinking about AI, and would you be using it in a year? You couldn't, right? You thought it was years away. So ChatGPT happened. I think we're in a similar moment with quantum. It's ignored today, but it's coming. There's solutions to protect crypto. There's a few BIPs, for example, like this one. You can check it out and encourage to look at it by Jamison Lopp. So there are solutions. We can solve this, but there is an urgency to it. The other reason that there's urgency is we have long lead times to upgrade Bitcoin and crypto assets in general. For Bitcoin itself, it takes at least a month, if you ignore all other transactions in the network, to simply move everyone across to new wallets based on the limitations of throughput. So we're looking at least basically 6 to 12 months to fix this. So we need to be solving this really next year, 2026, in order to get in a solution before 27. So Satoshi's coins will probably be market dumped. Why? Because who's going to upgrade his wallet? Who's going to move those coins to a quantum secure wallet when the time comes? So, Michael Saylor recently said he's going to do something ethically proper and burn his coins. Well, actually, burnt and lost coins the highest risk because no one has maintained that infrastructure. We want to keep active wallets. It's good for the network, but it's also good to maintain security upgrades and relevancy of the tech through time. So quantum's the biggest threat now, but who knows what it will be in 10, 20, 30 years, right? So this is an existential threat to crypto. So what can you do? First thing I encourage you is to speak up. Get talking to your community, your social media, get involved in the Bitcoin improvement proposals, review them, give feedback, just get talking. I think that's really important, is we just need to start taking action very soon. And if you're like me, you might think about doing some kind of quantum hedge. For me, as a relatively large crypto holder, I think it's important for me to have an allocation in quantum stocks to try and hedge that risk in the worst case event at this point. So now, is it a hedge or is it alpha? This is something I want to discuss. You might recall a few years ago, and even today, people saying to TradFi Finance, just put 1% in Bitcoin, maybe 5%, and you'll see a massive performance improvement, risk-adjusted return benefit to your portfolio. And that was true. And I think we're at a similar place with quantum today. Why? If Bitcoin goes to 20 trillion or $1 million a coin in 10 years, based on a relatively fair conservative assumption for quantum of 100 billion from McKinsey and sort of standard PS ratios from Stern University, you get to about 50% higher annualized returns for quantum over the next decade. So it's not just a hedge, it's a bit more in my opinion. So it's a bit like Bitcoin in 2017 at $2,000. The whole market cap of quantum assets is priced at about 50 billion today. So if you want to consider that, how do you do it? It's not an easy question to answer, to be honest, because there's a lot of quantum assets out there. There's about 50 around the world. Half of them are private. There's 4 known big names in the US there, which are obviously very liquid, being US-based. But you've also got the big tech, right? Amazon, Google, Microsoft, IBM, etc. So who's going to win the quantum race? I don't have that answer. For me, it's important to have a diversified approach and kind of rebalance to capture for winners over time. So which is why we've created a quantum index to try and solve that problem. If you're interested, check it out. But the main thing I want to get across today is that we have a really big threat in the room, and it's growing every day with quantum, and we need to solve on it really within the next 2 years. We can't afford to be one day late, or the whole trust in this network will collapse. Bitcoin's value at the end of the day is built on trust in code. Can't trust the code, what's it worth? And if Bitcoin goes down, you can imagine what will happen to everything. So I encourage you to just basically get out there, speak, take action, and help us try and progress this, implement a solution in 2026 before it's too late. Thank you.